Welcome to Looking at the Markets with David Modell. Today I'm going to give you a basic introduction to Renko bars and Renko charts. Now, if you're accustomed to candlesticks, the regular candlesticks that are based on time, then this is a different way of thinking with the Renko bars. Now, with the candlesticks that you're probably accustomed to, those are based on time. Every period, for a certain period of time, it forms a new candlestick. For example, if you're watching the daily candlestick chart, then a new candlestick is going to be formed every day. Doesn't matter if the price of the stock goes up, down, sideways, doesn't move at all, doesn't matter. A new candlestick is going to be formed every day. If you're looking at the 5-minute chart, then every 5 minutes a new candlestick is formed. Doesn't matter where the price goes or if it doesn't move at all. Every 5 minutes a new candlestick is created. So with the candlesticks that you might be used to, those are time-based. Now the Renko charts, the Renko bars, are not time-based. They're price movement based. The price has to move a certain amount before a new Renko bar is formed or created. Doesn't matter how long it takes. If it takes 30 seconds or if it takes 5 years or if it takes a month, doesn't matter. The Renko chart is going to wait until a certain amount of price movement up or down happens before a new bar is formed. In this case, and this is stockcharts.com, and we're looking at the S&P 500 Renko chart, and I set it to 10 points. You can change that number, okay, but we'll just make it for 10. And so the S&P 500 has to move up or down 10 points before a new Renko bar is created. Doesn't matter how long it takes. If it takes a little bit of time or a lot of time, doesn't matter. It's based on price movement. And that's why I noticed that February had a lot of bars, a lot of Renko bars, while May barely had any, had very few, because there was evidently a lot more price movement in February than in May. All right, now the red bars represent going down in price, and the white bars represent going up. And in this case, I set it to 10-point movements. And so the red bar means that the S&P 500 went down 10 points, and the white bars represent it going up 10 points. So for example, let's say, let's say right here, okay, the S&P 500 was at 2660. Then a new bar was not going to be formed until the S&P 500 either went up 10 points or down 10 points. It happened to go up 10 points first before, it went up rather than down, and so it formed a white bar, and now it's over here. If it went down 10 points first, then it would have formed a red bar, and it would be down here, but that's not what happened. So that's the Renko bars. Those are the traditional Renko bars, the point-based Renko bars. They're fixed. Notice that each bar is the same size. And the advantage of these over the candlesticks you might be accustomed to, the time-based candlesticks you're probably used to, the advantage of these Renko bars is that it gives you a big picture view and filters out a lot of the noise, a lot of the head fakes. Because if you see here, we can look at the big picture. From, in the last half of March, from here to here, the S&P 500 went down. We can see that clearly and quickly and easily with the Renko bars. Whereas with your regular candlesticks based on time, you probably would see a lot more noise, a lot more head fakes, chopping around, and that could affect your trading or investing. If you're looking just for the bigger picture and you're not worried about the time, you were more worried or concerned more about the price movement, the price action, then these Renko bars could be something you might want to look at. Now, these are traditional fixed size, point-based Renko bars. Now, we can change it on stockcharts.com to ATR-based rather than traditional Renko bars. And the default setting is 14 period, and that's ATR's average true range, and I made a video on that, so you're encouraged to check that out if you want to. And so now the bars are not exactly going to be the same size. The size of the bar is going to be whatever the 14 period average true range is at that moment. And so if you're looking for something that's very fixed and not changing so much, then the traditional Renko bars that we showed you before might be better for you. If you want something that changes based on the average true range, based on the how big the price movements are, then you may want to go to the this modified average true range version. And I know it might be hard to see. You might have to look closely, but the size of the bars changes. Like I see some very, very small bars here, and I see some bigger bars here and here and here. So it does change, and whatever the average true range is at that moment, that's the size of the bar that's going to be formed. And that's how big the price movement has to be before it forms a new bar. And so the average true range is constantly changing, and so the bar sizes are constantly changing. They're not changing that much, as we can see here, but they are changing. And so if you want something that kind of changes with the times and changes with the average true range, then you can go with that method. Or you can just use the traditional point-based method if you just want something where the bars are the same size every time and something more fixed and more constant, and that's okay too if you prefer that. Let's go over to tradingview.com for just a different view of it. This is Apple, and we're using the traditional fixed size Renko bars here, and I put it on $2. So Apple has to move $2 up or down before another bar is formed. Doesn't matter what the time is, doesn't matter how long or how short the amount of time it takes. It has to move either up $2, Apple has to move up $2, and that would form a green bar, or down $2, that would form a red bar. Now you might say, well, what if it gaps up more than $2? Doesn't matter. It's only going to form a $2, a 2-point bar there, even if it moves more. It's just two points at a time, because that's how I set it. And you could change that number. You can go into settings and change it. Change the bar size or box size, whatever you want to call it, to 3, 4, 5, 10, 1, whatever you want. Those are the traditional fixed size bars, and again, you can go to average true range sized bars, and whatever the 14 period or wherever you set it, you can change that number. Whatever the 14 period average true range is at that moment, that's the bar size. And that's the requirement before it forms a new bar. And if you look very carefully, you'll see different sized bars here. We have a bigger one, and then a slightly smaller one, and then it gets bigger. If you look carefully, you can see they're a little different every time. Not super different, because the average true range is not going to change that much. But maybe it will, depending on the stock. Okay, we can see this one's bigger than that. Now we have wicks on these, and that's fine. But I imagine most people who use this system, they're mainly going to be looking at the bars or boxes themselves, although the wicks can be useful as well. All right, so this was an introduction to the Renko bars and the Renko system. It's very interesting. If you're less concerned about the time it takes to move a certain amount, and you're more concerned with just the price movement, and you want to filter out a lot of the noise, a lot of the little tiny movements that may not matter to you so much, you want to just look at the big picture and filter out all that noise and the head fakes, or a lot of the noise and head fakes, this may be a system for you to consider. If you found this video helpful, please give it a thumbs up on YouTube and leave a comment. And please subscribe to my YouTube channel so you can receive the latest updates, and hit that bell so you can receive the latest updates on my financial educational videos. And if you'd like more help with charts, stocks, whatever it is, trading, investing, and you want to have a plan, and I can help you put together a plan, then you can email me at any time. My email address is right down there. It's davidmodell@gmail.com. Thank you so much for watching and listening. I'll talk to you again soon.